Good evening. My name is Peter Resnicek from shadowtrader.net, and this video is all about the Coinbase IPO, which is going to start trading on Wednesday, April 14th, 2021. This Coinbase IPO is really hyped, and I think a lot of that hype is actually warranted, and you'll see why when I get into some of the details in this video. And the video is basically just going to cover a lot of the basic facts about the IPO that I think everybody should know: the what, the where, the when, the how, the pricing, the number of authorized shares, how big the float is going to be. But also at the end of the video, I'm going to be talking a little bit about potential strategy on how you can invest and trade in this IPO, because I think that most IPOs usually follow the same path. So I'm going to show you a chart of another recent IPO, and we're going to talk about Coinbase potentially trading like that, and I'll show you some possible entry points that might make it a little bit of a smoother ride for you if you're looking to trade or invest in this IPO in the future. But before I get into all that, I want to tell you a little personal story about why this Coinbase IPO is on my radar at all. Those of you who watch my videos every week, you know that I basically talk about technical analysis, short-term options trading, weekly options, a lot of market profile, etc. And this isn't really in my wheelhouse. I'll be the first one to tell you I'm really not much of a long-term investor. I have not a whole lot of money, to be honest with you, in long-term investments of equities. I do obviously hold long-term investments in real estate, etc., but not so much in stocks. But every now and then something comes on my radar that I think is really quite interesting and is basically worth talking about and might be worth putting some money into for the long term. So for me personally, the way that this came on my radar was that I started investing in cryptocurrencies about, I'm going to say 3 or 4 years ago. And I did it through Coinbase on the exchange that we're talking about here, which is the stock that's about to go public on the 14th. And when I started investing in crypto, mostly Bitcoin, it was very small at first. I probably had no more than $2,000 on the platform at any given time, and I would just, buy and hold, and prices would go up, and sometimes I'd look at some charts and let it off a little bit higher and buy and hold and whatever. But it wasn't such a large amount of money because it was very, very small. One of the things that I never really thought about were the fees. It didn't really occur to me what the commissions were because I'm used to, being a professional trader where you don't think about commissions at all. And I always tell my subscribers and people who watch my videos that if you're thinking about costs in trading, you're really not thinking about it correctly, because you shouldn't be. It's, costs have come down so low that they're really not a factor. So I just assumed it wasn't a factor until recently. About a month or so ago, I decided that I wanted to go a little bit heavier on cryptos. And I wanted to put about $50,000 into Ether. And it's because I saw the way Ether was trading, and it was coming back up to an all-time high of 2,000. And I thought, okay, this is going to represent a break higher. And I thought maybe over time Ether will double, or maybe do a 5x up to 10,000 or whatever. Doesn't matter. Every crypto investor has these ideas in their head of where it could go to, but really nobody actually knows, because this is really still the Wild West and we don't have a lot of history to go on. But that's really not the point of the story. The point of the story is that when I wanted to buy $50,000 worth of Ethereum, the Coinbase platform told me that I could only do it in increments of up to $25,000 per week. And I believe this is for AML, or anti-money laundering protocols, which completely makes sense. And I don't have money actually on the platform. I have my checking account connected to it. So what'll happen is I will buy something and then it'll debit from my account, and then I'll buy something again. And because this limit was there of $25,000 per week, I decided to buy the Ether in $5,000 increments. And this is where it gets kind of interesting. So when I bought the Ether in $5,000 increments, and I started at like 2,000, and then it fell all the way back down to, I think, 1475-ish or so, which worked out really well for me, because when it was all said and done, I had accumulated the $50,000 worth of Ether at a basis of, say, 1,700-ish, like just over 1,700, which is good. In my line of work, I call that having good location. So I was fine with that part of it. But what I wasn't really fine with was when I started looking and seeing what the commission was that I paid. On every $5,000 of Ethereum, I paid Coinbase $75 in commission. And this, I thought, was this just absolutely floored me, because this is like trading stocks in like 1951 or something, right? I mean, none of us were, well, I shouldn't say none of us. Some of you watching may have been trading then. If you recall, you had to pick up the phone and talk to your broker, and it would take you 3 days before you even knew what your fill was. And the commissions probably started at like $100 minimum, and they went up from there, right? So I was thinking, wow, on $5,000 worth of crypto, I just paid $75. Like this is really a huge commission. So I thought to myself, they must be doing a lot of revenue, obviously, and they must be pulling in a lot of net income. And basically, I was right in my assumption, because recently they released an 8K on the SEC, and the numbers are absolutely staggering. So we're going to get into that as well. And that really was the catalyst that made me think, aha, these numbers must be incredible. Now some numbers have already come out for Q1 2021, which I'm going to show you in the video. And when you look at those numbers compared, not just to stocks that basically are IPOing, because most stocks that IPO, as we know, may not even have revenues, and even if they have tons of revenues, they often don't have net income. Net income is something that they're thinking about, on down the line, like someday when they're profitable. But Coinbase is about to IPO with a staggering amount of revenue and a staggering amount of net income as well, which I think kind of puts it in a different class from other initial public offerings. So strap in, grab a drink, maybe grab some popcorn. I think this is going to be a good one. You're going to enjoy this, and let's get into it. Okay, Coinbase IPO. Let's start with some basic facts. When is it happening? It is happening on Wednesday, April 14th. So mark your calendars for this, because it should be pretty explosive. It is going to trade under the ticker COIN. Makes sense, right? That's in the name. Here's where things differ a little bit from traditional IPOs. This one is going to be what's called a direct listings. That means there are no underwriters. There will not be a Goldman Sachs, Credit Suisse, blah, 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 acting as middlemen and collecting about $1 billion in fees when this goes public. Rather, the shares are going to be sold directly to the public. So the existing shareholders are going to be selling them directly to the public. And this is not the first time this has happened. This has happened before. Spotify did it recently, also Palantir did it, and Slack did it this way as well. However, it is noteworthy in that it is the largest direct listing ever to happen on the NASDAQ. The other ones that I just mentioned happened on the New York Stock Exchange. The question you have to ask yourself next when you're looking at this, obviously, is just how many shares are going to come out. And that, of course, is public information, which is very easy to find because you have to register shares before you can sell them as per the Securities Act of 1933. And we know for a fact that there are 114,850,769 shares to be have been registered. So we can assume that all of those are going to be coming to market on Wednesday. And remember this number because it's important, because we're going to be talking about the float, which is going to represent the 114 million shares, and then also the valuation, which is calculated on the total number of shares authorized. And we'll get to that in a second. What will Coinbase trade for potentially? This is the number that I wrote down here, which is $343.58. And you are probably asking yourself, well, how did you come up with that number? That is simply the average price on NASDAQ private market, as you can see here, that the shares traded for during Q1. Stocks that are not yet public yet do trade, right? There are shares available. Owners have the shares, insiders have the shares, early employees have the shares, venture capitalists have the shares, and they can trade them in private markets, and those prices are recorded. And the average price that Coinbase traded for in all of Q1 of 2021 is this number right here, $343.58 per share. So remember that number, because we have to assume that this has a lot of weight in terms of what the price is going to be when the stock opens for trading on the secondary market on Wednesday. So what is the potential valuation of Coinbase? What could it be worth? So I wrote down this number here, which is $96.9 billion, which is pretty massive. $96,889,560,000. And you're probably wondering, how did I get that number? Well, that number is the roughly $343 average amount of the private sales times 282 million, because that is also a number that is publicly available. If you look at all their filings with the SEC on the Edgar site, you can see that there are 282 million shares authorized. So that is really what is going to be the actual market cap of the company, as opposed to the float, which is that 114 million shares that I just talked about in an earlier slide. How does that stack up against other exchanges that are already public? So this is where things get really like mind-blowing when you look at how much this is potentially going to be worth just on day one, and how some of these stalwarts rather of the exchanges are already worth. So Intercontinental Exchange, which is ICE, which by the way owns the New York Stock Exchange, right, the largest and most venerable exchange, ICE. That is worth about $65 billion, and that stock trades for about $114 currently. The NASDAQ, which I'm sure everybody has heard of, NDAQ is the ticker, trades for about $153 per share, and that is a $25 billion company. And the CME Group is trading for about $200 a share and has a pretty high valuation and is worth about 74 billion, or 73 billion rather, in terms of market cap. So it's pretty interesting that the newcomer, Coinbase rather, could actually come in at around 96 billion if the shares just trade hands at the same amount that they've been trading currently in the private market. Now, a question that you should be asking yourself is, why is this so expensive, and is it potentially worth it? I think it potentially is worth it, and the next couple of slides I think will show you that. These are the revenues of Coinbase per year from 2016 up to 2020, and then also in Q1 of 2021. This is incredible. In 2016, they did $16 million in revenue. The next year, they did almost $1 billion, 927 million. Then 520, 483, and then in 2020, 1.1 billion. But here's where it gets interesting. In just the first quarter of 2021, they did 1.8 billion in revenue in one quarter, whereas in the prior year, they did 1.1 billion for the entire year. Now, if you're a follower of Investors Business Daily and the IBD 50 and any of those metrics that they use to value companies and look at growth amongst a bunch of different metrics, and then they come out with their IBD 50 list every week. Okay, this stock is absolutely killing it. All right, this is the type of numbers that those type of fundamental analysts absolutely just salivate over when they see this type of growth, because really that's all that matters to growth stock investors, is they want to see the top line figures just going up, up, up in terms of every year more and more revenues, and they want to see earnings growing as well. This is a recent filing. It's called an 8K, which details the Q1 estimated numbers for Coinbase. And again, here's where I don't want to overuse that word staggering, but this is incredible. Although I'm not that surprised, because if you remember from the intro, what I was telling you about my own personal experience with Coinbase, I had a feeling these numbers would be high, but I never thought they would actually be this high. So let's just go through this for a second. This came out on April 6th, very recently. First quarter 2021 estimated results. And again, this is filed with the SEC. You can just look it up on the Edgar platform at any time. First quarter of 2021, company currently expects the following as of or for the 3 months ended March 31st, 2021. They have 56 million users on their platform, all right? 6.1 million monthly transacting users, assets that are on the platform of $223 billion, and this is very interesting, I thought, that represents 11% of the total market share of all cryptos. Think about that. The market share of all cryptos, 11.3% of those cryptos are all held on Coinbase, all right? Of that 223 billion, about half is from institutions. That doesn't, to me, mean so much from the stock. I think it means a good thing for the crypto market in general, that the bigger players are involved. They're using these companies such as Coinbase, et cetera, for custodial duties, et cetera. I think that's definitely good for crypto. Definitely adds a lot of credibility. Trading volume, 335 billion. Again, this isn't just in one quarter. On that volume, they did 1.8 billion in revenue, which brought them net income of about 730 million to 800 million. So let's just stop right there. Many companies that come public are often talking about net income far into the future. Think of the stocks that you trade now that are worth hundreds of dollars a share now, but when they came to market, they didn't have net income at all. And their revenues certainly weren't pushing 2 billion a quarter, not even close. So this is just in comparison to how this, the metrics that this company is doing now compared to, companies that generally IPO, all right? So keep all of this in mind. Again, these numbers are quite impressive, I would say. So now, let's just say that it comes to market, and you have to ask yourself, how are you going to trade this? And you'll notice here that I have a chart on the screen of Airbnb. And I have that on the screen actually for a reason, even though Airbnb has absolutely nothing to do with cryptocurrency or Coinbase. Maybe someday you'll be able to get an Airbnb. I mean, you could probably do it now. I'm sure you could pay your Airbnb host in crypto, just exchange, wallet keys with them or whatever. But Airbnb's business model has absolutely nothing to do with the exchange of Coinbase, etc. But there's a reason why I'm showing this. So firstly, when you are investing in an initial public offering, you have to ask yourself the first most important question. And if you answer this question wrong, I believe you'll get hurt. And the question is, am I an investor or am I a trader? If you're an investor and your outlook, your time frame outlook is very long, it won't matter so much where you get in, because your thesis is that cryptocurrency as a whole is growing. More and more people are going to be drawn towards cryptocurrency trading. Revenues and net income of Coinbase will grow over the next few years, and your stock will appreciate. Doesn't matter so much, okay? If you are a trader, you have to be very, very careful. Remember, a lot of IPOs generally, not all, but many of them tank on the first day. Notice that this is what happened to Airbnb. And again, Airbnb has nothing to do with Coinbase. The reason I'm showing Airbnb is literally I just picked out an IPO that was relatively recent. You can see here it went public in December of last year. And the reason I just picked it out of the blue is because I just wanted to show you any old recent IPO to drive home the point that almost all IPO stocks, and I've seen hundreds of them over the years, almost all of them exhibit the same pattern. They all seem to trade the same way. They all have a big pop on the first day where it may go higher, and then it fades, and they eventually go lower. And here's where things get interesting. So you can obviously trade this from the long side. Obviously, you're not going to be able to short it early on until there's shares to short. But you can trade this from the long side. But better yet, if you are a slightly long-term trader, you want to use this to your benefit to know that the stocks generally trade like this and wait for key points for entry. So what are the key points for entry? Well, always mark off what is the open of the IPO price, right where it opened. Very often, trading back up through that opening price, that is a buy point. That's buy point number one. And you can break up your entries maybe in half or in thirds or whatever and do it at different points. Buy point number two on any IPO is when it crosses that initial surge price, whatever was the prior high of the day, is that, okay? In all of the IPOs that I've seen, and I certainly haven't seen them all, I'm just telling you that this is a pattern that exhibits itself over and over and over. And these two buy points usually are very, very powerful, and mostly, and again, this doesn't happen all the time, but usually if you breach this level, you won't go down to this level. And if you can breach this level, then you've got an even better chance of not going down to this level. And again, if you're a long-term investor, then it shouldn't matter to you so much. Some IPOs will open and they will resist at the prior high, and they will stay range bound like this. That's very powerful, because then obviously you know where your buy point is there. And some IPOs will be very, very weak off the open, and they'll actually sell off really hard, which makes it really tricky, because you don't want to be a buyer until you get at least back to that opening price, and you may have to wait a while. It usually doesn't make sense to try and pick a bottom if it sells off hard from the open, because you don't have any technical signposts, for lack of a better word, to go by, right? There is no support level. You can't quote unquote look to the left of the chart and find that area where a prior bottom was from 6 months before, or a trend line or a channel or something like that. There is no technical analysis that you can really do on an IPO because it's new, and that's why the signposts or markers that you want to look at are more about, trading back through the open, trading back up through the high, etc. And obviously you'd want to have your stops set somewhere below the low and know that this could be a very wide stop. But again, usually the way you want to look at IPOs, if you are a early investor in them, is that your time frame outlook will be long and you'll be holding for appreciation. If you are in the trader camp, then like I said, it will probably be a little while before you can short, but you can certainly trade from the long side, and there should be fantastic momentum. And you can also use these signposts for day trading as well. For instance, if you watch the IPO, and even if you're not a long-term investor, and you see that the first area has been cleared, meaning you set an alert and the stock then trades back to the IPO opening price, okay, you may want to bias yourself long there for day trades. Maybe it then trades over the high. Again, you'll bias yourself long on day trades. These are usually areas where you can buy pullbacks or get long on momentum. Sometimes if the stock will break up and over, and Airbnb, if you look at it, it failed it, but a lot of times it will go like this. It'll come up and it'll find support at the prior high. Or more importantly, it'll find some support, and again, this is kind of more for day traders, at the opening price. Notice this candle here, and I'll just clean this up a little so we don't have so much clutter, but notice this candle here. Where did it find support? Right at where the IPO open was. So it didn't do much, but there's some, for day traders, you're not looking for much. You get a little move there. And then it goes back below, more into range, and again, it's using this time here to resolve the open. So these opening prices, wherever it opens, are very, very important, and they usually continue to be important for a little while in the stock. So watch those key levels, and remember, understand which type of market participant you are. Are you a trader or are you an investor? And let that guide your decisions. And that is all. I hope you enjoyed it. So let's just recap and also talk about some of the potential positives and negatives going forward. Positives being potential tailwinds for the stock, right, that are going to keep it at a high price. And then we'll talk about what maybe could be some headwinds. So number one tailwind, I would say, for the stock is just the basic interest in crypto. What is happening right now? In shorter term trading, in the futures market, market profile. Those of you who know me and follow my Peter's Pre-Market Perspective, or maybe you're a subscriber to my weekly options advisory, you know that I often talk about a concept called ruling reason. What is the ruling reason? The ruling reason is like the zeitgeist, so to speak. It's that spirit of the time, as they say. It's what's going on right now. And I always like to say that that is the most powerful catalyst in the markets. It's more powerful than any other technical analysis, nuance, or anything. It's what's hot right now. Where's the momentum? What are all traders and investors en masse thinking? And right now, crypto is hot. Crypto is also probably in the early stages, I think, of being hot. I think it has a long way to run, and that is a potential tailwind for Coinbase. And it should keep interest in crypto afloat for some time. And as there's high interest in crypto and as there are high crypto prices, that also impacts the revenues of Coinbase. So that is definitely going to be a factor. So let's just say that that part's obvious. Crypto's hot. Everybody knows it. I do believe that's a big part of the ruling reason, and I do believe that's a big part of the story here. But let's think about it a different way. This allows a lot of people who are as yet underinvested or not invested at all in the crypto revolution to participate. I think of it as akin to like gold mining and the gold rush, right? Where was the easier money made? Not in mining for gold, but in selling people picks and shovels. Think of Coinbase as that way. It's the pick and shovel play as opposed to actually mining for the gold yourself. Institutions out there, I think at this point, are still underinvested in crypto, as are a lot of people. And again, this gives them the opportunity to participate in something that is not as much of a pure play as like a mining stock, but it's almost as pure of a play. Obviously, the revenues of Coinbase are going to rise and fall more than likely with the price of crypto, and crypto's hot. As it continues to expand, as it continues to bring more people into the fold, they're going to need a place to trade it, they're going to need a place to hold it, and Coinbase is obviously at the forefront of that revolution. Now, what are the potential negatives here? Well, two things really come to mind to me. One is simply competition. There are going to be other exchanges that are going to be coming public. Coinbase is obviously not the only game in town. So that's potential there, that some investment dollars could eventually go to other exchanges. The other thing I was thinking of is what happens as this industry starts to mature. What will happen if they all start racing to the bottom as far as these commissions? If it turns out to be the price war, for instance, that is even somewhat similar to what happened with equities that was kicked off by Robinhood. Relatively recently, as you recall, Robinhood pushed everybody else's equity prices down to zero, right? Because you could trade for free on their platform. Is there potential that that could happen with crypto? And with all these other exchanges in the mix, that could happen. That, I think, could be a potential tailwind, or rather headwind, rather, I apologize, could be a potential headwind for Coinbase going forward. Regulation is another. We don't yet know what is going on with crypto regulation going forward. Right now, it's kind of like the Wild West, as I said earlier. Will some regulation come down the pike that could potentially hurt the market, make it a little bit more difficult for these exchanges to make money? I don't know. These are just things that you should think of. Obviously, there's a lot going on here that we just don't know, but we do know some facts, as I've shown you in this video, and the facts as we know them now put this stock in basically a whole other echelon above and beyond other IPOs, and I do think it could be interesting. Also, pay very close attention to what I said at the end of the video in terms of how you should be trading this. Know what type of market participant you are. If you're an investor, that's different from being a trader. If you are a trader, that's far different from being an investor. Don't also try and flip-flop. If you are watching this video and you are a long-term investor, I would really advise you not to try to be a trader. If you are a trader, and then all of a sudden you decide that you're going to be an investor, that's usually because you've made a grave error in trading, right? And you're a bag holder, and now you're thinking, oh, well, I'll just become a long-term investor because the outlook for this is just so fantastic, and I'll make my money back eventually. Usually, both of those scenarios are recipes for disaster, so please be very careful. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.